Welcome to this explainer. Right now, it feels like everyone is laser-focused on the companies designing the brains of artificial intelligence. But you know, a massive bottleneck has quietly emerged in the storage sector. Today, we're going to unpack exactly how Kioxia is positioning itself as the indispensable memory engine of the AI revolution, and why this absolutely matters for the future of global data infrastructure.
Okay, let's dive right into this massive number. Kioxia's over-the-counter stock has surged an incredible 560% this year alone. Now, you might be wondering, how on earth does a legacy hardware manufacturer pull off growth metrics that look more like a buzzy AI software startup? Well, it all comes down to a fundamental shift in how artificial intelligence actually operates in the real world. The analysts at MarketWise recently hit the nail on the head when they said, if there's no memory, there's no AI. This is known in the industry as the storage wall problem. Think of it this way. NVIDIA's GPUs might be the hyper-fast brains of artificial intelligence, but enterprise solid-state drives, or SSDs, are essentially the library that gives that brain something to read. Without high-capacity, lightning-fast storage to feed data into those processors, the most advanced GPU in the world is basically just sitting in an empty room doing absolutely nothing.
To see how this shapes the current market landscape, let's contrast two very distinct phases of AI development. 2023 and 2024 were all about compute-heavy AI training, actually building the massive models. But the shift we are seeing right now is heavily toward AI inference. This is when the AI actually runs and responds to real-time prompts. Inference requires massive amounts of what's called warm data stored on hyperscale SSDs, feeding context to processors at blistering speeds.
Here is our roadmap for today. We'll be moving through the AI storage wall, Kioxia's Toshiba origins, the SanDisk Manufacturing Alliance, next-gen BiCS FLASH tech, KXIA share stock and financials, and finally, mergers, IPOs, and risks. Let's kick things off with Section 1, the AI storage wall, and why compute desperately needs context. As NVIDIA's CEO Jensen Huang pointed out at CES 2026, context, rather than just raw computing power, is the new hurdle we're facing. This concept is called ICMS, or Inference Context Memory Storage. In simple terms, for an AI to give you a highly accurate, personalized answer, it needs to quickly access a massive library of context. This dynamic is driving unprecedented demand for hyperscale storage, and it's the exact reason why memory manufacturers have suddenly become the absolute most critical players in the entire AI ecosystem.
Moving right along to Section 2. Kioxia's Toshiba origins and their legacy as the inventor of NAND flash.
Their timeline maps out a genuinely incredible journey. It literally starts with inventing NAND flash memory inside Toshiba all the way back in 1987. From there, they established a pivotal joint venture with SanDisk in 2000. Fast forward to 2018, and Toshiba Memory was spun off in a massive $18 billion deal led by Bain Capital before finally rebranding as Kioxia in 2019. So what we are looking at here is essentially the founding father of flash memory, newly unchained and operating as a pure-play storage titan. Which brings us to Section 3, the SanDisk Manufacturing Alliance. This is a 25-year survival story.
You really have to look at the sheer financial scale of this partnership to understand it. SanDisk is paying Kioxia $1.165 billion in access fees, paid in installments between 2026 and 2029. Why? Just to maintain their shared manufacturing operations. Kioxia actually operates the facilities, and SanDisk pays handsomely to access that incredible scale.
This joint venture isn't just a basic supply contract, it is a hardcore collaborative survival strategy. Recently extended all the way through December 31st, 2034, this alliance covers the massive Yokkaichi and Kitakami fabrication plants in Japan. Together, these facilities form the world's largest flash memory production base. By sharing R&D and capital expenditures, Kioxia and SanDisk leverage unbelievable economies of scale, allowing them to go toe-to-toe with global giants like Samsung. Let's shift gears to Section 4, next-gen BiCS FLASH tech. This is what's actually powering the AI infrastructure. So the crucial takeaway here is that this advanced BiCS FLASH technology represents a massive architectural leap. Kioxia is utilizing something called CBA or CMOS, directly bonded to array architecture. Think of it like building a skyscraper where the elevators are built directly into the foundation rather than attached to the outside. It drastically reduces the distance the data has to travel.
Instead of just making routine incremental refreshes, this breakthrough tech simultaneously improves speed, efficiency, and scalability. It is purpose-built to handle the brutal data-heavy workloads demanded by modern AI data centers.
And when you deploy that architecture into the real world, the metrics are just wild. Take the performance for Kioxia's CM9 series PCIe 5.0 enterprise drives. A 65% bump in random write performance, 55% better random reads, and up to a staggering 95% better power efficiency in sequential writes. In the data center world, where power consumption is a huge bottleneck, that efficiency metric is pure gold. This is the exact pick-and-shovel hardware required by AI infrastructure builders today.
Now for Section 5. Let's talk about the stock, KIXAY, and that massive 560% surge. Following a 59% revenue surge in fiscal 2025 and another 37% jump in fiscal 2026, the projections going forward are simply staggering. Analysts are modeling triple-digit compound annual growth rates through 2028. We're talking 118% for revenue and 232% for net income. Kioxia is aggressively ramping up its high-margin enterprise data center chips, purposefully shifting away from its historical reliance on the lower-margin smartphone and PC markets.
Yet, despite that explosive growth and the huge stock surge this year, Kioxia trades at a remarkably low 8.5 times earnings. So why the big disconnect? Well, it's largely because the broader market still prices Kioxia as a traditional, highly cyclical memory hardware company, rather than recognizing it as a high-growth AI infrastructure play with structural long-term contracts. Finally, Section 6, Mergers, IPOs, and Risks. Let's look at the horizon for Kioxia.
Kioxia is really balancing on a knife's edge right now. On the catalyst side, there is an anticipated U.S. IPO listing later this year, which would allow them to trade on major exchanges rather than those thinly traded OTC markets. There are also persistent massive rumors of a merger of equals with SanDisk, a move that could instantly create a powerhouse capable of surpassing Samsung in total bit production. But on the flip side, the hazards are very real. The memory market is notoriously cyclical, and some analysts warn of a potential industry oversupply by 2027 if fab capacity grows too fast. Plus, operating entirely out of Japan means they carry inherent geopolitical and supply chain vulnerabilities.
So as we wrap up this explainer, I'll leave you with the ultimate dilemma driving the market right now. Will the AI inference supercycle permanently change Kioxia's DNA, elevating them to an unstoppable infrastructure giant? Or will the semiconductor industry's history of brutal boom-and-bust supply gluts simply repeat itself? You'll definitely want to keep an eye on their transition to the U.S. markets, because the answer to that question will likely define the next decade of data storage.